All right, hey, what's going on? I thought today would be a great day to jump in and provide a update on the Bitcoin price action. Um, we're down, what is it, roughly 6% today. It is January 12th, 2024. Hope everyone's having a great start to the new year. All right, so I'm pretty excited about today's video. It's going to be short and sweet. I want to take you guys down a top-down type of analysis on Bitcoin, starting with the monthly chart and then finishing off on these lower time frames, so we can really get a good idea of what's happening in the price action today. All right, that being said, let's go ahead and jump into the charts on TradingView. The link is in the description if you want to follow me on tradingview.com. It's essentially a social media platform where you can post your ideas for various, pretty much any type of financial instrument out there. You can do your technical analysis and publish ideas and see how they play out. So follow me on TradingView at Lorenz_capital. All right, so here we go. So we're looking at Bitcoin on the monthly chart, right? We're seeing we're in January. We are looking now at each one of these candles as a month worth of data, just a reminder. So there's October when we had this initial pump, November, December, and then that was the end of the year. Now here we are at the beginning of 2024. So already we've pushed up into 48,000, and I'm leaving it as a blank sort of screen right now with no TA, just so you guys can see how it looks. Sometimes I like to just take off all the drawing tools and all of the indicators and just get, you know, a visual, simple view of the chart on the monthly. So, because there actually is information as well to be had in just the candlesticks themselves. So far it's not looking like a great candle right here for the month of January. We've wicked up and now we've kind of come down. We're still technically um, closing above the open for January, but not by a very large margin, and it does not look like a very nice candle at this point. So when I go ahead and throw these Fibonacci's onto the chart, okay, right now they're hidden. It looks a little bit busy. It looks a little bit intimidating, and it looks like a lot of lines on the screen, right? But remember, this is the monthly chart, so there's a lot of detail when you zoom in and you can see the respect of all these levels. But essentially, all I have right here is one Fibonacci from the top there to the bottom there of that 2018 bear market, okay? And then these are the extension levels. And then the second fib I have, maybe I'll differentiate it a little bit here, but the second fib is obviously I'm going to now take the latest bear market cycle from October of 2021 down into October of 2022, right? So that's the second fib, and it's a little bit here. Maybe I'll just I'll hide each one of these. Let's just hide this one here. All right, well, I can't seem to hide each one of them, but essentially this is the thick one, right? This is the extension levels, and then these thin black lines here are the new Fibonacci's, okay? So that's the 61.8. So you can see that this now provides a little bit more information, right? We can see that this January wicked up into that 61.8 fib, which is also the 261 extension. Remember, there's two Fibonacci's. There's the extensions from the 2018 bear market, and then there's the actual fib retracements that we've got from the top to the bottom, and that's 61%. So if you watch my last video, you will see that I was calling out that exact move to 48K and then likely a pullback, because this level is going to be massive, not only because of the fibs, but also because if you look left, that structure leaves clues, and you can see in the past that we've had monthly closes all over this level, right? Wicks. So this plus it's also 47, 48K. We're guarding essentially that 50K cycle level for the bearish outlook, right? So the bears are definitely going to be guarding that 50K level. So overall, not too surprised to see this pulling back just shy of 50K, okay? And this is how I wanted to kind of zoom out and show the monthly chart. Now what I want to do is jump into the weekly chart, okay? And we can see the respect of these levels and where it starts to come in, right? So here's the initial breakout in October. Now we've got 1, 2, 3, 4, 5 weeks it took us to push up to this 38.2 fib. Okay. Then we blew past the 38.2 fib. This is why you know these fib levels are definitely going to be very key levels in this market, because you can see the resistance there for multiple weeks at this 38.2. Once we got past it, we ripped right up to that next level. Look at that. And then we had 4 weeks on this 50% fib, right? The 241 extension. And we saw almost 5 weeks all battling this level. Now what we saw this week is basically a breakout fake out, in my opinion, because we we broke out early in the week. Right now, this is Friday. We're coming almost up to the close. Right, we've got 2 days. See that? Off to the right, 2 days and 4 hours left before this candle closes. And right now, it's actually in the red. So this week technically hasn't gone anywhere. Right? I mean, it's gone up and down, but essentially it's right where it opened at the beginning of the week. So look at that wick right off that. So we know that that's a key level. Okay. So on the weekly, now we understand what's going on. We zoom past this 38.2, past the 50, and then up to the 61.8, and now we're back down to the 50. Okay. And I'm just referring to these Fibonacci's. Okay. Watch prior videos if you want to understand a little bit more about how I draw the Fibonacci's. And it's really simple, but essentially, right, when you're drawing those Fibonacci's on the massive cyclical moves, they're going to get respect. And you could even see it even back earlier on in 2023 in the summer. All of this respect chopping around these fib levels, and you can even drill in further with volume profiles and all that to really show where the big volume spikes actually are coming from, right? And they will coincide with the fib levels. So that gives us also another indicator that the traders are watching these fib levels. So now what I want to do is I want to jump into the daily and zoom in one more level and really start to drill in. So you can see now how cool this starts to look when you get into the daily, and we're looking at the same levels, guys, that we just zoomed in from the monthly chart. So now we see all these days right around that 38.2, right? And then this is the pump, almost a 30% up move, up to just skipping this whole vacuum of air, right? 30% move right up into that 241, and we hit resistance, right? Hit resistance. Now what happened is basically on Monday, right? Markets opened up, and we saw this pump all the way up into the 261. Look at that. It even whipped off the 61.8. It doesn't get any better than this, ladies and gentlemen. So give me a thumbs up. We're going to be keeping tabs on these charts in perpetuity, okay? And we're going to be watching this for timing, for exit and entry points going forward. So look at this beautiful sort of, I mean, you want to call it an ascending, like an ascending channel, right? But I don't know, it's a bit of a different structure. I haven't really seen too many examples of this type of structure, but essentially, I just want to show you guys what's going on in the charts. Don't be intimidated by this pullback. It's nothing. It's really just profit taking. And if you throw on the other thing I wanted to touch on, if you've made it this far in the video, this is a really juicy indicator, and I want to throw it on. It's called the production cost, right? So this is the cost to mine. And what I'm going to do is I'm going to take the fibs off now, okay? And I want you to see, if I zoom out and I bring in all that data from past cycles, right? This is the essentially the cost of one Bitcoin to be mined for the miners, including including electricity cost plus the hardware that's required to set up a Bitcoin mining operation. So you can see every time there's a halving, right, the cost to mine goes up, and we get these huge deviations and that's basically huge profit in the Bitcoin mining sector is when the price starts to deviate really far away from the miners' cost to mine, right? So the cost to mine right now is technically like 50K. So the miners have technically been underwater just mining this Bitcoin at a loss for like a year and a half, according to these metrics. And I'll just show you guys my parameters, but essentially I've got the electricity cost at 5 cents per kilowatt hour. Um, and then the mining cost of electricity, I've got it at 60% of the total operation. So 40% of that would be added on. So essentially, just electricity alone, if you're mining in the United States, is going to cost you $30,000 to mine one Bitcoin. So that's this red line right here. And then if you tack on the additional 60% to additional 40% for all of the other costs involved in mining, you get up there to around 50K. And remember, depends on the efficiency of the miners. Not all miners are really mining at 50K, but this is really just to sort of show you that technically this is still in a very, very value area for Bitcoin, right? If you're buying something at the cost of production, it's pretty cheap, right? And based on what we've seen in past cycles, what happens is when the miners are not profitable on Bitcoin, they will not sell their Bitcoin. They will hoard their Bitcoin, right? And we've seen the price in this last bear market cycle too, right? In 2018, as we came into the very, very bottom of the bear market, that we started to see the miners, right, underwater in their holdings, and then we pop out of it and come back in. So it's always going to be this fight with the miners, and we saw it back here as well in 2014, right? It's always going to be this battle with the miner profitability because this is a commodity, right? So this is about as fundamental as it gets for the Bitcoin price action. And just keep in mind, here we are, we're actually in the cost to mine. We almost got up there and the miners started to break even. I think that's kind of where we're seeing also some of this sell pressure come through, right? Is just from that supply side. But ultimately, if you think about this from the grand scheme of things, right? This is still technically undervalued at 43K. And sometimes people think Bitcoin's really expensive, and these are the kinds of things I like to show them. Um, you know, in terms of fundamentals, right? Because it's still technical analysis, but the cost to mine is the cost to mine. And I do see in the next year, maybe 14, 16 months, I think we will break out of this, and the miners will start to see big profit again as we get to about 100K, probably by the end of the year. I do think this time, next year in 2025 will be around the 100K level. And then I think in 2025 it could even get a little bit higher up there, maybe towards the 150 mark. But as of right now, guys, you're still accumulating at a pretty fair price. Yes, it is 100% profit, 100% premium off the bottom, right? Bitcoin doubled off of its 16K bottom, even more actually. It's about 150%. But that's why I do like to have the Fibonacci's on there, because you still realize that you're at the 50. We're back at the 50% fib, which means you're buying 50% off. 50% off that all-time high. Okay, and up at the 61.8, it's about 40% off all-time high, right? So we've got a bit of a deal here now. Some of the sell pressure is starting to come into the market. We could go lower. We could hold on to this 50% fib, or we could come lower into this 38.2, right? Which would be around 36K. I mean, this is not rocket science, right? If we can't hold on to this 50 level, we will see a drop. So I just want to also, before I go, prepare you for a potential drop. Potential, right? Potentially, 17, 20%, totally normal. You should expect that on any given day in Bitcoin. Do not get shaken out of your positions. If you see something like this, you have to be prepared for it. That's what the technical analysis really helps with, right? It really just helps with framing your strategy and keeping your emotions in check. All right, so I hope you guys enjoyed today's video. If you did, hit the thumbs up. Consider subscribing. I'm going to be updating these videos. I got good TA. I think I could provide a lot of value, just from a learning perspective, as well as a market entry exit perspective. But right now we're sticking to the strategy. We're holding it long, and we're just going to watch this chop out within the fibs. But But until next time, we'll see you later, and thanks for tuning in.